Mortgage interest rates to the moon. What did the Fed say in the September meeting that caused mortgage rates to jump up? What do we expect for the future of mortgage rates? And how high can they stay for how long? Stay tuned. I'm going to go over it in this upcoming video. Matt, the mortgage guy, residential mortgage broker, licensed in 48 states. If you want to connect me and my team, go to greatmortgagebroker.com. If you want information from someone who's in the weeds daily with real estate and mortgage, subscribe to the channel. I love making content. I've got near 1,000 videos. I'm going to keep making them. And what I want to be able to do is give you real-time information that matters to you if you're a home buyer or if you're looking to refinance or do something with a mortgage. You might search something on Google and get a result from September of 2021. That's not going to be relevant in today's market. So the information is always going to be up to date. I'm going to tell you what's happening in Q4 of 2023 and how that's, good or bad for you as a buyer, what type of techniques you should be using to go out there and find yourself a deal. For today's video, I want to talk about interest rates because everybody loves to talk about interest rates. Interest rates for a primary residence are inching up towards an 8% on the 30-year fixed. And I know for a lot of people, this is disheartening. It hurts affordability, and there's some negative connotation with it. In this video, I'm going to tell you why it could be a really positive thing for a lot of people. But first, let's talk about why. A lot of people said, hey, listen, Matt, the Fed met. I heard them. They paused. They didn't increase interest rates. So why the day and day after that, Fed meeting where Jerome Powell spoke, did mortgage interest rates increase? Well, the really short explanation is at the meeting when they talked, and this comes out in the notes, of what Jerome Powell said, for the most part, they said rates will be higher for longer. And higher for longer means that their projections are projecting less interest rate cuts in 2024. A lot of those projections where they tell you kind of what the plan is going forward, and this affects mortgage interest rates today, said that there might be 4 interest rate cuts in 2024 because they're going to tell you where the Fed funds rate is today, where they expect it to be the end of 2024. And they don't expect to hike forever or to keep the Fed funds rate this high forever, currently 5.25 to 5.5. But what they said this week, which caused mortgage interest rates to go up, is they said, we're not going to come back down as fast as we initially anticipated. So that's what's hurting mortgage interest rates. What can you do even in an environment where mortgage interest rates are high? This is something that I think a lot of people are missing, but certainly clients I'm working with, investors that I know, are taking advantage of this market. Mortgage interest rates are high, which causes demand to go down, less people shopping for homes. While this would, no doubt cause more opportunities for buyers, we're in this funky market where there's very little supply. There's not a lot of homes for sale. And so, depending on what price point you're looking in, what market you're looking in, the opportunity may be great. 60 days on market and you can offer 50,000 below list, or it might just be that you're able to get a little bit of concession, because when demand is down but supply is also down, you don't have as much of an imbalance where the buy side has all the leverage. The sellers still have their fair bit of leverage because they're one of few homes on the market, especially if they're in a good neighborhood, especially if they show well, especially if they're priced right. Recently, I just had a buyer put in an offer, and even at today's rates and even at, a price in California that's affordable, 6 offers, and the seller is able to multiple counter offer all 6 of those. But stay tuned. Q4 of 2023, Q1 of 2024, I guarantee you, if you're looking, if you're ready, if you're pre-approved, greatmortgagebroker.com, there is going to be opportunity to be had. There's going to be sellers that need to sell. There's going to be sellers that don't understand that not only seasonality and Q4 being a time where there's less buyers anyway, you shrink that even more by putting a high interest rate hurdle in front of these buyers. There's going to be an opportunity where a home sits for 21 days, 30 days, 45 days. The longer the home's on the market, the more incentive the seller has to reduce their price to give you concessions as a buyer. So I'm excited for investors. I'm excited for homeowners. Even though rates will be higher for longer, there's going to be massive opportunity. Now, in closing, what I will say is everybody wants to know, when will interest rates go down? Because if I buy something with a 7.5 or a 7.75, I want to know when I can refinance it into a 6% and save myself $350 or $425, whatever it is based on the loan amount. One, I have no crystal ball and nobody knows for certain. But two, it's almost unanimous. And you can look at the Fannies, the Freddies, the largest wholesale lenders, and what they're doing, which tells you they strongly believe mortgage interest rates are going down in the future. With the Fed's current stance, only a couple rate cuts projected for 2024, I think we start to see real interest rate relief end of 24, early 25. So don't expect to get a 6% in the summer of 24. I just don't think it's going to happen. But eventually, whether that's 12 months from now, 18 months from now, or 24 months from now, inflation will be under control. Fed will have hit their 2% target. They'll start to cut that Fed funds rate from 5.25 to 5 to 4.5 to 4. And as that Fed funds rate comes down, as goes 30-year fixed rate mortgage debt. So it will come down. How far it will come down, we can't say. How soon or how quick it will come down, we can't say that either. But if I were a betting man, I would bet that you can get yourself something in the 6% range in 2025. That's my best guess. Flame me later in the comments, this age well, all that good stuff. As long as you subscribe, as long as you leave a comment, I'm all good with it, right? If you want to connect me and my team, greatmortgagebroker.com. Hope this helped.